Welcome to the market report for Friday, March 2nd, 2018. Okay, so what we're looking at here is the Dow Jones just opened up. I'm going to start the charts right here. The Dow Jones just opened up and it's down 256 points at the start today. Now, we've had a lot of down days, and it's 24,352 right now at this moment. I think that this little sell-off that's occurring right now is a little bit premature. And because this little bit of a sell-off right now is a little bit premature, I think it's been oversold a little bit, the market at this point. I think we're going to see a rebound, a little bit of a rebound, because it's been a little bit oversold. This is not the crash I was anticipating. Not to say that the stock market can't crash. If it wants to crash, it's like the old joke about the where does a gorilla sleep? Where does an 800-pound gorilla sleep in your house? And the answer is anywhere he pleases. You know what I mean? And that's the way with the stock market. If it wants to crash, you can't tell it not to. I mean, it's going to, but my tendency is to think we're in for a little bit of a rebound. I think it's a little bit oversold, this crash, and the timing's not quite right yet. It's not quite right yet, but it's coming. It's coming. It's leading up to it. Anyway, so now let's take a look at the silver price, because you know what? The silver price is on the move today. I don't know if this is going to continue, if this is the start of something or not. I don't tend to think it is the start of something. I tend to think that they're still going to continue to suppress it back down. I am almost expecting them to knock it down again. And anyway, it's up to 1654, and it's at the high side of what the range has been lately. Now, if we see the green line, that's today. The blue line is yesterday, but if we go back 2 days ago to the red line, you can see some dips here. It went almost down to $16.15. Now, if you take a look at the difference between that $16.15 and what it is today at $16.54, $16.55, that's about a 45-cent difference in price, which is substantial, that's pretty good, little up. So let's hope that continues. Let's hope that rally continues in silver. Now let's take a look at Bitstamp, and we're going to take a look at the Bitcoin price. And Bitcoin is doing okay. It's right in there at $10,824. It made its bottom in here at $5,920, and ever since then it's been climbing. But it's kind of just leveled off lately, and it kind of looks almost like what the stock market's been doing, but not quite, But that's probably why a lot of people are saying, hey, there's a correlation between the stock market and Bitcoin. But no, there's no correlation there. They're two completely different animals, the stock market and Bitcoin. They do have a correlation in that they are both speculative investments, yes, but cryptocurrency is a totally different animal than the stock market. I personally think that cryptocurrency is a better place to put your money than the stock market, because I think the stock market is about the worst place possible to put your money. Of course, it's done awfully good over the past number of years since 2008 because the Fed's pumped it up. But now you got to realize the Fed is pulling at all that pumping that the Fed did all those years. Now they're working in the opposite direction. So what do you think is going to happen? I mean, it's just pretty much blatantly obvious what's going to happen and what's coming. Let's see how the market's doing again real quick. 234, down 234 right now. It's moving fast right now, Let's take a look at oil prices. $60.89. Oil is down right now, and it's down 10 cents on the day. That's for sweet light crude futures. Take a look at the U.S. 10-year. The U.S. 10-year, over the last 5 days, the U.S. 10-year is starting to climb a little bit, but I don't expect it to go any higher than, say, 3%. On the yields on the U.S. 10-year. I don't expect it to go over 3%, and I don't expect it to go below 2.7%. So I expect it to be in that range between, and it's right in the middle of that range right now, between 2.7 and 3%. Now, I think what's going to happen is after March, after the end of March, when the Fed raises their selling of their toxic balance book, which is called reverse quantitative easing, when they move that up, they want to move the bar up from 20 billion a month to 30 billion a month. And when they do that, then we're going to see this U.S. 10-year climb above 3%. And as soon as the U.S. 10-year goes above and it starts to get up like 3.15, 3.25, that's when we're in for our crash. That's when we're in for our crash. The big crash in the stock market. Now, this is probably going to come sometime after. See, it's a delayed effect. They raise it to 30 billion at the end of March, and then it takes about a month or two for that effect to actually hit, where the bond yields start on the U.S. 10-year start to climb up over 3%, 3.15, 3 point, and they start to go up there. It takes about a month or two after. Then you're going to get your big crash. Boom, bang, you know, and that's what I'm waiting for. That's what I'm watching for. And so there's your U.S. 10-year for right now. Now let's take a look at the cryptocurrency market capitalizations. $462 billion. It's up from I think it was 450, around 450 something yesterday or the day before. So it's moving upwards. Bitcoin most notably, it's up 2%. But there's an awful lot of red numbers here on the board today. Litecoin is one of the red numbers at $206. Bitcoin Cash is in the green, but just very marginally. Ripple's down. Who's down big? Let me take a look here, see who's down big. Stellar's down pretty big. But IOTA's down 2.45% at $1.92. Dash is up just ever so slightly. Monero is one of the coins that's really up this morning, 4.96% at $315. Okay, so let's take a look at the U.S. dollar index right now. And she's back down below 90. She's had a little bit of rough going here. Now, I'll tell you what I expect. When this crisis hits in the stock market, what I actually expect to happen is three big movers. The dollar is going to be one of the big movers. Silver price is going to be one of the big movers, and so is gold. Those and oil. Oil's going to go down, and we're going to see gold, silver, and the dollar go up. That's what I'm expecting when we get the big stock market crash. I'm expecting everybody to run to safe haven assets. This is the thing. When they're going to turn this around, everything's going to change directions then. So what we're looking at a, how would I describe it? Some sort of almost like a car crash. When you hit something head on, first your head goes forwards. But the next result is your head gets slung backwards after the impact. You see? And that's what we're looking at. We're looking at a high-speed impact here, the economy making a high-speed impact. And first we're going to get slung forwards. That's the deflation. And then we're going to get slung backwards from the whole thing with the hyperinflation coming. So the deflation is going to act as a trigger for the hyperinflation. And if the Fed even tries to reverse policy on all this to stop the deflation, then we're in for the hyperinflation. So if they even try to slow down at this point and put on the brakes, so if the Fed comes out and says, okay, we're going to stop our reverse quantitative easing process and we're going to not raise interest rates anymore, then the economy will start heating up and we'll head into the hyperinflation anyway. The dollar then will just tank, simply tank. So let's read a little bit from Peter Schiff here. He says, the bad news, Peter Schiff says, is we are going to live through another Great Depression. And it's going to be very different This will be in many ways much, much worse than what people had to endure during the Great Depression. We are going to be in a dollar crisis. These hot inflation numbers that we are getting is going to get a lot hotter. All of this inflation has been in the financial markets and in the stock markets and in the bond market and in the real estate market. Everyone loves inflation when it's making you rich. The problem is going to be when it makes you poor. That's when it starts showing up in the cost of living. All the things you need to buy end up being a lot more expensive. So he's kind of talking about the hyperinflation here, right here. But for the last couple months, they've been talking about inflation, you know, and talking about how, and but this has all been caused by this whole thing, this Trump rally in the stock market and everything's been pumped up. But now the legs are being pulled out from under all of this. And we're not really heading toward inflation. We're heading toward a sudden shock of deflation. This is what's coming. And it's going to come fast when it comes. And it's going to take everybody by surprise, probably including Peter Schiff. But the good news for Peter Schiff, he's going to be right in the end, because when the Fed puts the legs back under this, we're going to go back to inflation and in steroids. Inflation on steroids. So let's read a little bit more of this. It says, when you are talking about the magnitude of the debt we have, that extra money raising interest rates is big. That's going to be a big drain on the economy to the extent that we have to pay higher interest to the international creditors. A lot of this is phony GDP is coming from the consumption, while the average American who is consuming is deeply in debt, and they are going to be impacted dramatically in the increase to the cost of servicing that debt. Given how much debt we have and how much debt is going to be marketed, the massive increase in supply will argue for interest rates that are higher. The Fed thinks they create economic growth by saying, let's jack up the stock market, and then the economy is going to grow and people are going to go out and spend more money. It's actually doing damage. If you create a bunch of phony wealth, the people end up spending money that otherwise they would have saved. You are undermining economic growth. Everything the Fed has done has undermined real economic growth. That is why this coming collapse is going to be so devastating, says Schiff. It's shrinking government that grows the economy. So he says there that it's shrinking government that grows the economy. And he's absolutely right. But the government isn't shrinking. It's like 23 million people in America are government. What the heck? What do you need so many? It shouldn't take more than 10 people. Now that we have computers, I mean, it shouldn't take more than 10 people to run the government. You know what I mean? And those 10 people should be answerable to all of the people in the United States. There should be some way that the computer can analyze the opinions of all of the people in the United States instantaneously via computer. I mean, we're able to do magnificent things with our cell phones. Why can't we have it so that the people can voice their opinion? There must be something we can do. Some form of regulation, rather than having 20-some-odd million employees that don't do anything but basically push a pencil around all day. So listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next market report. Probably Monday. Bye-bye for now.